Let's do that again. Okay. So hello, everyone. I'm glad to see our attendees joining in tonight. We are back for Palante's weekly webinar Thursdays. And if you were in last week's workshop, we discussed all the aspects of credit unions and the benefits of joining them. And now to continue on tonight, we will be discussing credit and credit reports and how to understand it because it can get, very confusing at times. So we have Alicia Portada and Alfonsina Morel from the Lower East Side People's Federal Credit Union again with us tonight, and they will be presenting on this topic. So now I will let Alicia and Alfonsina start their presentation, and everyone feel free to ask questions. Thank you.
Thank you, Yakari, and everybody here tonight. We're gonna start sharing our presentation on the screen. Like Yakari say, I'm Alicia Portada. I'm the Director of Communications and Community Outreach for the credit union. I'm very happy to talk to you about a little bit about like credit and understanding credit. Also, good thing is that you can see a bit of like the views from a financial institution like ours, right? Like how do we see people and how do we see their credit? Being here accompanied by Fonsina Moret, she is the manager of all the commercial lending at the credit union as well. And she'll be helping me with the questions at the end because I'm sure you're gonna have a lot. So before we start into credit, let's talk a little bit about the credit union. I know we saw this last time, but I think it's important for you guys to know like where is this information coming from. I'm gonna slow down a little bit because I'm not. This is being translated, so I'm not gonna go so fast. No problem. So my credit union's Lower East Side People's Federal Credit Union. We have a branch in the Lower East Side. We've been in the neighborhood there for 35 years, but we have other branches. We have one in East Harlem. That one is on 2nd Avenue and 117th Street. And we have another branch in Staten Island. And we're actually thinking about expanding. So we always kind of go scope the neighborhood and kind of see where the needs are. But our goal, our general goal, is pretty much to serve the community in the communities where we are. So just little things, not little things, but like try to make it brief. One thing, the main difference between credit unions or my credit union and other banks is that we are cooperative, right? Credit unions are cooperative. Pretty much everybody who belongs to the credit union is a member, and only members can access services. This is accounts, checking accounts, loans. You can borrow from it. Also, the credit union is a non-for-profit organization, and the non-for-profit status allows us to keep our accounts more affordable. And you can see the difference when we talk about, a savings account that you just need $25 to open. And if, or a monthly charge of $3, which we know that compared to other accounts is a lot cheaper, right? When we see in the market, something more like $15 minimum, right? And we give options to avoid to pay this $3 monthly maintenance fee as well, which is to keep a balance of $75 and more. If you do have an account and you can manage to keep a balance over $75, then the account is completely free. We have free checking accounts and stuff like that. So nonprofit, cooperative, and another thing too is we invest in the community through our loans. So we can see here now about the benefits, as we mentioned last week, and I want to mention again, if you're a member of the credit union, you have to open a savings account. The savings account, like we see there, is like the top account, it's like the umbrella account. And then we can access all the other services that we have. Today, we're going to concentrate on the orange side, on the orange column, which is personal loans, mortgages, and mostly like, like credit, right? How do we see credit? But in here, it's kind of like just to show you that there are more services that we offer. And at the same time, you always have to have the savings account. It's kind of like require account. So we can go to the next one. What would you need to open an account or to become a member? It's pretty much a picture ID, and we ask for a proof of address. I'm showing right now that we also have youth PAD savings accounts with us, so it's open to everybody, right? We have accounts for kids, accounts for young people. We have accounts for adults. There are many things that we offer. One important thing that I want to mention too is that if somebody has an I-10, could also have or receive services with us, in the sense of like, if you have an I-10, you can build credit on the I-10. And I-10, for people that don't know what it is a number that the IRS provides to people who don't qualify for a Social Security number. This number allows people to pay taxes. That's why the IRS gives this number. I mean, that's what they care about, like somebody who makes some money in this country to pay their taxes. But in the banking side, it's that a lot of opportunities where it allows you to build credit or open an account that you can earn interest as well, and access to lending products like personal loans and credit cards. But even more important, have a car loan or a mortgage, right? Like loans that allows you to access to build assets. So we can go to the next one. This is just a sample of the application that we provide when somebody wants to open an account. It's two pages. We try to make it very simple. Thank you for the zooming. Personal information. This is also to mention that if, say, for example, our East Harlem branch is not convenient to you, everybody should know that we also offer all these services online. So we will pretty much send you this application for you to fill it out online. And if you need questions, like us to walk you through the application over the phone, we can also do that. Okay, so let's talk a little bit about credit opportunities. Before we enter into what's a credit score and a credit report. So for us, from our credit union side, it's very important to, when we see an applicant or a member that is applying for a loan, we want to see whether the person is going to pay the loan back, right? And how soon probably will pay us back, how problematic the payment is going to be. So for us, it's very important to analyze somebody when we do a loan, especially because it's the money of all of us, right? So all of our members, I'm a member. Every single person who has an account is a member, and we vote for who we want the credit union to be managed with. So this is very important. So from your side, or from the consumer side, it's very important to show that you are the person, right? That you will be the person who be a good, a good borrower. So who is going to be paying back the loan responsibly. So one way to indicate that is by showing a good credit, right? And when we say credit, with credit, we refer to credit history, we refer to credit score. When we say credit history, it's credit history of payments as well. There are some payments too that may not be reported on your loan or on your credit report. But like even your rent, stuff like that, those things matter. So if you are in the situation right now that you have some credit, but it's not so good, I mean, I want you to know that there are ways to improve your credit. If you are in a situation where you haven't never accessed credit, or maybe you have accessed it so long ago and now it's kind of like, you haven't checked and you don't think that there is much going on there, there is also a way to rebuild it, right? Or build it for the first time. Two very important things that I want to say in here is that from our side, from the financial side, right? We want to check your credit history, right? That's what we're going to talk about today. But also we want to check your sort of like your proof of income, right? Like we want to know how can you manage the loan? I mean, like if you can repay the loan on time. And this is something that, you know, we've been doing it since inception. We want to make sure that we make loans that are repayable. It seems it's a very simple concept, but in practice, we know that a lot of offers that we see out there, they might be very attractive, but sometimes the goal is not to be repaid, but rather to like sustain it with fees and high interest rates, right? When we provide a loan, we want to make sure that the loan is something that can be paid back, you know, and it can be paid back without causing that much trouble. So this is part of the analysis of our loan officers in that credit union that make sure that your income can actually support the loan that you want, right? That your credit history shows that, but your income can support the loan. That's very important to us. The credit score for us is a guidance of the rate that you will qualify for, but yeah, let's just go back the slide just here. Here is just to what I was saying earlier about if you want to build credit for the first time, right? We have products, and when I say we, so like I was referring to all other credit unions that we do have products like credit builder loans, which are products that help you to build credit, right? Like you can kind of remove the risk or the hassle from it. Like you're not gonna get into that. They are designed exclusively so you just build credit. As a matter of fact, the one that we have at the credit union right now, it's one that is so like we have a very low interest rate. We offer on the credit builder loan 5%. Oh, it's actually it's 4.99 right now. But the reason why we do that is just to cover the expense that is for us to report your credit to the bureaus, right? The credit bureaus. It's not really something where we use this product to make money or to support or to pay all the expenses. It's just to pay the expense of the product itself. There is no fees for that. We don't ask you for an initial deposit of $500 like I see in other places. It's something that I really suggest, you know, you do it if you want to build credit for the first time, or you can say this to other people that want to build credit for the first time, because sometimes building credit for the first time, like with a store card, might not be the best, because those store cards, actually I will say, I don't think they're the best, because their credit, the APRs or the rates that they have are a lot higher. So something that can help you to control it for the first time and you kind of organize making the payments, removing the risk that you will get into debt, will be something good for somebody who's starting. But if you want to do that, right, if your goal is to build credit, one thing you have to keep in mind is to be responsible with the payments. And I mean, we're all responsible. What I'm saying is like, try not to be late with that. And we know that a lot of things happen with it, but you know, there are ways that you can communicate with a financial institution if you're late. I mean, you don't want to have your financial institution to report you as being late on the payment when you just starting, right? So the whole thing is to build credit, is to pretty much say, oh, one payment on time, second payment on time, third payment on time, right? You want to build that good credit history that you being on time all the time, or for the loan, for the term of the loan. If you want to rebuild credit or restore credit, we can do kind of like the same techniques, but my best advice will be to go with a financial counselor first to kind of strategize what's better for you. Sometimes getting a credit builder loan is what you need. And sometimes it might be that you just need to arrange, a better system of how to make your payments. Sometimes it's just to clean your credit report with information that doesn't belong there anymore, right? And those changes actually can change it can impact your credit score and improve it, right? I mean, that is the whole goal. And I will be providing information about the financial counseling services that we have as well. But this is something that definitely we can do. So let's enter into a credit score. But before I move here, we're going to talk about credit score, understanding a little bit why, what is when somebody tells me that I have 350 or 850. But I'm just checking because I've seen the chat moving a little bit. Jacari, is there any questions so far?
We don't have specific questions just yet, but we do encourage people to start thinking about some questions that they'd like to ask about this, and so that would be fantastic, and we'll reserve until the end.
Yeah. Okay, I just didn't want to not pay it. I see the.
Oh no, that's fine. We're awesome. Monitoring all that.
Awesome. So a credit score, like I mentioned before, from that side of the lender, financial institutions, it's a way for us to predict whether it's one variable, right, that we use to predict whether a loan, will be good or not, or the probability to get paid back, right? We all know that the credit score runs from 350 to 850. So being 350 kind of like the lowest and 850 the highest credit score. Also, we have 3 credit bureaus, national, right? That's Equifax, Experian, and TransUnion. These are the ones that allow us to, they have that information about our credit, and they pretty much sell it to financial institutions like ours and other people that would, would be interested in this. Like, for example, when you rent an apartment and say, I'm going to put your credit, right? Like stuff like that. Like they collect all this information. Now, the 3 credit bureau companies do have their own sort of formula or how to calculate the credit score. But in general, your credit score should be kind of the same on the 3 companies. So if there will be a huge difference, then it might be a problem. Sometimes some financial institutions only report to 1 or 2, and that causes a problem, right? Because when you put your Equifax, maybe your Equifax credit report, maybe some information that was convenient to you or was good for you is not reported there because the lender didn't report it to them. This happens not so often. Most of the time is when there is some wrong information. But if you would have, or you've seen something like this, I think it's something that we can work it out with a financial counselor, because this is kind of like the tedious part where you have to correct information, and it's just sending a letter to the credit bureaus. Our financial counselors have templates on how to do this, to get the credit bureaus to do this faster. Sometimes when we as consumers try to reach out to them, there will be like a lot of hassle, right? So this is the nice slideshow of how, the credit score is graded. We have, like I was telling you, that 350 to 850 credit score. And the thing here is like, if you see the middle and we have like the fair credit score, right? It doesn't mean like, for example, that if you have 0, I mean, if you never had any credit score, and you have, let's say, you put your credit for the first time, it's not gonna even have any number, right? Because you never had any prior history. So you're not here, right? You just don't have any. So you're not here. If you see the situation and it's the first time you want to build credit, then it might be a good idea to start with a credit builder loan. In 6 months, perhaps you may have some credit history on the fair side. more like a 620, 650. That is fair, like it says here, that's okay. And the credit union, for example, credit scores of 620, 650s, they're fine with us. You know, they're not like bad credit score. In other places, they're asking for more. You know, if you want to buy something like a car or a mortgage, you know, you want to be around the 720 minimum, you know, because as you go up, right, as your credit score gets better, the price of the loan comes down, right? It's like an inverse relationship. So in other words, if you have better credit score, the pricing or the cost, right, of a product is cheaper. So that's the huge incentive of building good credit, because when we're talking about a mortgage, having those differences can save us like, you know, $500, $600, $800 a month. So what happens if you have 350, right, of credit score, or 450? Most likely when you are on this situation, it's because something has happened, something negative has happened to your credit. You perhaps have been late. You may have been in collections. You may perhaps even had some fraudulent transactions. So it could be many things that can be happening. This is when I was telling you earlier that when you are in this situation, my best suggestion is to speak to a financial counselor, because it might be, there is no one rule for everybody. There might be different things that may have happened. Like I said, some of these things is cleaning out old things, perhaps. Some of these things will be creating a payment plan to address better certain debt. Some of them may be even negotiating debt collection, debt collectors with debt collectors to try to, you know, pay the debt, but also like clean your credit. So there are many situations that can be happening here. When we talk with our members, we may give you like, okay, you know, like your loan, you know, when we pull your credit, this is the information that we have, and we give you a referral to speak to a financial counselor. If you will want to speak with one of our financial counselors, I will provide information at the end, but also know that you can call always 311 and give your zip code and ask for a financial counselor, and they will provide you for the information closer to you. And the last thing I want to say here is that think about credit as something organic. Not because today you have, you know, 550, for example, which is not so good, right? It's kind of like going towards the poor side of credit. It means that, okay, this is going to last forever, right? But also, I want to be very careful with saying that, you know, wary about some offers that I see sometimes, like, oh, we'll help you to rebuild your credit right away. Credit is organic and it takes time, right? So there are ways to do it, but it might be, I mean, for example, even somebody who just starts from nothing, right? Like doesn't have any credit and wants to build good credit, and that's everything fine. I mean, the minimum we see is 6 months, and 6 months, and somebody can have something like, you know, 620, 650, depends what all the products they have, but that's the time minimum. There is no such a thing of like, I help you in 2 months, you'll have it fixed, or in a month. You know, so we have to be very careful. Again, all the situations are different. It might be somebody who had a bad credit score or bad credit, you know, blemishes on their credit report, and they just were wrong, and the financial counselor helped them to clear it out. Yes, you may actually see an effect right away, right? But that, I mean, right away, I mean for the next month or probably 2 months, but that doesn't mean that that's the situation for everybody. And we have to be very wary about it, because sometimes we go with these offers and they may charge for it. It's just not, you know, one plan for everybody. Different things may have happened to us to have fallen a little bit on this area of not good credit. But if you're in a situation, best thing to do is try to work on it. We have help for that. let me just say, let me check. Okay. One important thing, I remember I mentioned to you what's my incentive of having good credit? Well, offers are cheaper, right? Supposedly, right? You can get better pricing for the loans. That happens a lot with loans, with car loans, with mortgages. But when we go to a store, and let's say, for example, we want to buy a laptop here, right? And we ask for, a store card, a store credit card. I mean, the average right now is 24% on a credit card, right? A store credit card, and even all the commercial credit card APR. The APR, by the way, is the pricing, right? It's the rate. This is an APR stands for annual percentage rate. So this is an annual rate. It's an APR. You can compare APRs with other offers, right? So let's say you bought the laptop on credit, or you put it on your credit card, and your credit card APR, or the price of your credit card, is 24%. Remember that when you see your statement, right, you see that there is a minimum payment, right, that is offered to you. Usually this minimum payment is calculated as it's a 4% of your current balance. I think it goes from 3 to 4%, the estimated, right? So I want to warn you about this because say, for example, you do choose to make minimum payments, right? See in this example, if you choose to do minimum payments, the final finance charge will be $550, right? And 4 cents, 0.4 cents. So it will take you a term of 7 years to pay off the $700 loan or charge, right? 7 years and $550 extra. So the real cost of the laptop, in this case, will be something around $1,250, right? So we can go to the next slide. It's one of the clear, messaging here is we can see here the difference of making a minimum payment as opposed to putting a little bit extra on the payments that we make. I'm talking about credit cards, right? Like if you put it on that on the purchase on a credit card, or maybe you sign up for some credit at the store. I've seen that too. So this is a very simple example. Say your laptop actually cost $800 and the interest rate was 18%, right? Notice that these 3 examples have the same balance, right? Have the same interest rate. The only thing that changes here is going to be the payments that you make. So when we calculate, when the financial institution calculates the minimum payment, it's going to be the same. It's going to offer you, okay, you can pay it all, or you can pay $20, right? That's how much they're going to ask you as a minimum. Okay, so in the top example, if you see the monthly payments, if you do actually pay the $20 minimum payment only, then on interest, you'll be paying $815.49. This is interest paid or finance charges, right? How many months it will take you to do that is 131 months, right? That's a long time. I'm gonna jump right away because I think you get the idea to the bottom one, where it is the example of you paying $80, which is, what is it, like 4 times, right, your minimum payment. The interest that you will pay at the end of the loan, right, will be $73.30. And the months that will take you to pay off this purchase or this loan will be 11 months. So this is a huge difference, not only in time, but also on finance charges. So this is just for us to remember, like sometimes when we see, the minimum payment is only $20, that may not be the best thing for you. I mean, you may think, I'm just only paying $20 on the moment, this is an example for me to show you that when we calculate this on the long term, right? Like when we see the whole thing, the whole picture until the end of the year, until the end of the term, then this is not so convenient, right? Like if you're paying only the minimum and you're paying almost the same amount on interest, right? I'm saying you will pay $800 plus $815 on interest for an item, as opposed to just paying an interest of $73 because you make the monthly payment. This sort of analysis of how much you can afford an item is what we do too, right? We say, okay, well, if you apply for a loan with us, we will see, okay, so we will put a payment and we'll tell you the term of the payment. So you'll know exactly like, is this gonna be like 2 years and how much is it gonna be? So you know that there is a term, there is an end of your loan. On credit cards, it's a little bit riskier because on credit cards, the monthly payments vary. So you, like in this example, you can make $20 monthly payment, or you can make $80 monthly payment. Okay, so I just want to point that out. So here's the excellent information that I wanted to share with you about financial counseling. We do have our financial counselors that offer budgeting, debt management assistance, and home ownership preparation as well. It's a one-on-one private. Right now we're doing it over the phone, but we're coming back. My financial counselor is coming back in March, so very soon, in person. Appointments, this is the right cell phone that you can make appointments, and that's his email address. And if you want to try something else, like I said, I suggest also you can call 311. If you are you want to see somebody in person right now, and and you live in other place, like far from the branch, and you can call and you can give your zip code, and they will provide you with information of the closest financial counselor to you. And I want to leave my information, so we can go to the next slide. Here, if you are seeing this, or if you're not seeing this, but you are listening to me, I'm going to give you my telephone number, which is 212-529-8197, extension 0116. I'm putting here 2 emails, and we're going to be sharing this on the chat. This is my, by the way, this number is my direct number. My email is aportada@lespfcu.org. And you can reach out also to outreach@lespfcu.org for, and we have a team of 4 people in the outreach that can get back to you, help you out, like I was saying, walk you through the process of becoming a member, or making the application of a loan, or even setting you up with an appointment with a financial counselor. If you want to have more information, you can visit us. Our website is right here as well, www.peoples.org. And we always post information on the homepage of what's going on, of our events, of our promotions. So now I'm going to stop for questions, if there are any.
Yeah, absolutely. We have a bunch of questions that did come in, so we'll just get started with the first one. How long does it take to recover from a large hit on the credit score?
Yeah, I mean, I'm tempted, but I mean, like I said, it's different, right? Every situation is different. I mean, I'll tell you, like, in my personal experience, when I was younger, I would go to every single store and apply for a credit card there, because I thought that was the thing you're supposed to do, right? Like, you have credit cards for every single store, because that's, there were promotions associated with it. My credit was very bad. Well, let's say around 500, right? I think it was 500 at one point. it just showed that I was riskier. And then because I'm riskier because I have so many credit cards, right? My credit score had hit. It took me about a year and a half to come close to like a 650, and then 2 years to actually have good credit, like something where like 720. Pretty much it was a lot of like, and this is my experience because for me, I was working on my own at first, and it took me a while like to get a financial counselor. And I said, okay, we're gonna do a strategy, because even to close accounts, even to close credit cards, you have to have a strategy. I'm telling you, this is a whole science, and I'm telling you that it's not the same rule for everybody. But you know, when a financial counselor analyzes which cards you should close, there's a lot of variables to account for. You may want to keep the cards that have the longest history, that you have the longest history with. You may want to close certain cards that are very costly to you, you know, and you have to kind of evaluate, okay, which one makes sense, and which one should I close first, right? At the end, I mean, I live now with 2 credit cards. I'm okay. I'm fine. I have excellent credit, right? So this is just to share my experience. And I'm not saying that this is the same for everybody, but every case is different.
So I'm going to read a question in Spanish that came in Spanish, and that will be interpreted into English. ¿Durante cuánto tiempo queda una mala puntuación crediticia? ¿Años o meses? And this is similar to the previous question.
Yeah. I don't know if you, Alfonsina, want to add something else to clarify it a little bit.
I agree with you. I will say it's on a case by case basis. We usually tell our member when we do the saving loans to take at least from 6 to a year to 1 year to pay it off, like to start building credit.
Mm-hmm.
Say I have a credit card with a $10,000 credit limit, and I charge $9,000 and I pay it off immediately. Is that going to be good or bad for my credit rating?
If you pay the full balance, it's okay. But if you use more than 650, I forgot the percentage, but I believe if more than 50% of the available credit limit and you don't pay it off at the end of the month, it will lower your credit score. So if you pay it in full, if you borrow $10,000 and you use your credit card and you pay it in full at the end of the month, no, you're okay. But if you leave a balance of let's say 9,990, then there is a problem.
Mm-hmm. Mm-hmm. And yeah, let me add to that, yeah, this is one of the biggest myths, right? Like we think, okay, we have a $10,000, right? Can I use a $10,000? And I mean, in theory, you can, may not be the best for your credit. Actually, it's not. Some financial counselors will say the rule is 33% of your credit limit, right? And the whole point is like, if you build more credit and you can expand your credit limit, and you know that will be the best solution, because now if you, let's say, expand it to, I think the example was 10,000, but like to 15,000, that 33% will be a higher amount to allow you to do that. So excellent question. Be careful with that. It's always like, if you get you're starting building credit and you get a $500, let's say, credit card, you know, you're just starting, and you ramp it up all the way to $499 or $500, then it's not going to be helpful.
What amount is too many credit cards to have? Does having too many credit cards affect your credit score?
It could, because I mean that's you probably gonna have a lot of inquiries on your account. So every time a lender pull your credit report, it's gonna lower your credit score.
Mm-hmm. Mm-hmm. Also, there is a formula that they say 10% of your the inquiries are 10%, right, of your credit score or something like that. And then, but there is also like what I was sharing with you guys when I had a lot of credit cards. It is a risk, right, to have so many credit cards. The lenders could think, okay, if this person actually borrows from all the credit cards to the maximum and defaults, there are how many out there, right? And as a lender, you think, okay, so what are the chances that we are gonna get paid back if the person defaults all the other credit cards, right? We won't be that priority. So, I mean, I don't think we can throw a number, right? But we'll definitely tell you that, you know, personally, I could live with 2 credit cards. I'm okay. You can have 3 credit cards. I mean, I think there is a whole balance of like, you know, having credit cards and not having the, you know, to your balance to be so high to your credit limit. That's very important.
And like Alicia was mentioning before, is from my personal experience, I do have a lot of credit card. And but I do know I don't want to close it because I have them for a very long time. So it gives me the flexibility of many banks and credit card company are offering me promotions. So I play with it. That's the benefit of having good credit, balance transfer, and all of those things. It's like having a lot of credit card is not a bad thing, but you just got to use it wisely. You don't have to use it all at the same time.
Mm-hmm.
Question about the FICO score and how it reflects the credit score, the relationship, if they're one and the same or differences.
Yeah, I mean, right now there's so many FICOs and so many other type of credit. To be honest, it's a whole thing. I think it's very like commercial how they calculate a better way to cut, you know, to measure this. We use FICO for our, you know, evaluations. But I think I stand by what I said earlier, like all these different calculations that you know, they have different formulas, different names, but for the consumer the difference should be minimal. I mean, if you're doing good, if you're making payments on time, you have credit more for over 2 years, you have a range of credit, right? Not only like credit cards, you know, sometimes you have like personal loans that are more fixed loans, right? You should have the good credit, and you should have it like around the same amount. I mean, the difference will be like 1 point, 2 point, 5 points, something like that. It shouldn't be anything, you know, like it may change a decision. If that is the case, then that has to be analyzed, because like I mentioned before, like certain lenders may not report to some credit bureaus. But yeah, there are so many right now.
So only paying the minimum payment will ruin my credit score?
No, I mean, and that's the thing, right? Because as long as you make the payment, the financial institution will report it, you know, as a payment made, right? So this is one variable, which is making payments on time, having that history. That's one part to, you know, like there's different variables that make you have good credit. So that's one credit. So you're paying on time, even though you're paying the minimum, you're paying on time. That's good. My example was to show you it is good, but it's not so good, right? For you, because then you end up paying higher interest rates, what we call them finance charges. It might have an impact. Say, for example, like if you have a limit of $5,000, or yeah, let's put it at $5,000, and you're making the minimum payment, your, you know, like your credit availability is the difference between your credit limit and the balance that you have. Like $5,000, I use 2,500, right? And so my available is 2,500. So my balance is 2,500 and my available is 2,500. So if I'm gonna take longer to make the payment, to pay off my balance, right? Then your credit limit is not gonna have that much room to grow. That may also affect your credit, but I think in this case, it's just good to remember that not necessarily it won't ruin it's not a bad thing for you in the sense of like it reports your credit score on time, but it might be not the best for your pocket because at the end and in the long term, you're paying higher or more finance charges.
And also when the lender is reviewing any new application, we're gonna see it like we call it that you have capacity issues because you use your maximum credit available.
How can I change a high debt to income ratio? Is the only solution to find a higher paying job?
You want to, okay, maybe you want to say it from your lending perspective.
From a lending perspective, the answer is automatically yes, but also to accumulate, like if you don't have a lot of outstanding debt and also let's say rent or mortgage, that's the only thing that impact your debt to income ratio is the monthly payment or more or monthly rent payment or mortgage payment and all your debt versus your income. So having a higher income, obviously it helps, but having a lot of debt and having a high income is not a positive thing either.
Mm-hmm.
Do you know anything about the dark web? I got an email from my credit card company that my social security information was found on the dark web. What should I do?
I mean, I heard about it, but I don't know exactly what, you know. I mean, I think that intentionally they try to keep it dark. Yeah, I was gonna say maybe if your social security has been used, first thing you have to do is absolutely contact a financial counselor, check your credit. I mean, we've seen so many examples that people get surprised about it. They forgot to sign up somebody else long time ago, help them out to get a cell phone, that person never pay, you know, like it's so many things. So if you suspect anything, I mean, please, it's free. Also, if you don't want to do it with financial counselor and you have some experience doing it, you know, there are sites where you can go. I'll share in the chat too, you know, for free and obtain your credit just to see if you see something weird, like an address that never belonged to you. You know, your name cannot be, you see in the credit report, sometimes it says other names and you see another weird name or like another last name that you know, so then you have to speak to financial counselor and probably put some fraud alerts with the credit bureaus. I'll put it
also, yeah.
I'm
gonna
put it on the chat. I'm sorry, go ahead.
Okay, like you say that you receive an email, because I also recommend to call the credit card company, because I usually also receive a stupid email that they're scam. So just to make sure, call the credit card company. Like that's the only way that you can actually find out if it is legit.
I was told that closing accounts affects your score. Is that correct?
Closing all accounts is not recommended because, let's say, if you have an account from 1980, it's not recommended that you close that account because that account is the one that shows you like your payment history the most, or your history as a borrower. So closing all accounts, I do not recommend it. Some lenders, when you do debt consolidation loan, require you to close those accounts. But sometimes if you work it out with a lender, they leave it open.
Do you have a comment or opinion or recommendation regarding the freezing of your credit as opposed to trying to actively improve it, keeping it frozen for security or protection purposes?
My personal experience as a lender is that it's annoying to me because when your credit score is froze, and I try to pull out your credit, it's different steps that we need to follow. Like you actually has to give us authorization to pull out the credit report, temporary authorization, so it delays the process. But it's a personal experience. It's like if you feel that you need to do that to protect your credit, you'll do it, or otherwise you can go to the website that Alicia recommended and just do your due diligence as a borrower. Like check your credit card from time to time. Just don't forget about it and think that just because you haven't used it, you have a zero balance. So I would say it's a personal decision. How about you, Alicia?
Yeah, and I don't think that freezing your credit, prohibits you from working on your credit, right?
Mhm.
So you can do both. It doesn't exclude each other. If that is, something that helps you to because or you're being exposed, that's completely fine.
And a question here in Spanish that I'm gonna read out. ¿Es posible que la tasa de interés bajara si el crédito está bueno?
Definitely, yes. You have more chances to bargain. Like you can, if your credit is good or excellent, you can actually call the credit card company and say, "Listen, I'm getting an offer, let's say from Citibank or Chase. You need to lower my credit score, otherwise I'm going to take this offer," and they will lower it. So you have more chances and opportunity to bargain with a higher credit score.
So does your credit union help with building credit? How much does it cost?
Yes, we do. It's free of charge. We have a free financial counselor in-house that he will go over your credit report and he will help you write letters to your past due lenders and everything. So we also have a program that is called Saving Loans that is actually for building credit. And all you need to do is become a member of the credit union.
How does the union or the credit union operate as far as elections, internal elections, as far as making decisions that are made internally that affect members?
We host there are many ways. All the members are welcome to run for the board of directors. Actually, our annual meeting is coming up where all the members voice their opinions. Our board of directors are also available. There are many ways to connect. We have several committees, supervisory committee, credit committee. We're opening a membership engagement committee now. There are ways to communicate with the leadership, including like to run for the board. It's open, it's democratic.
Is filing for bankruptcy a bad thing?
I would say yes, as a lender, but it's also a personal decision. Like if you go through a debt of your family and you actually doesn't have any income and you have a lot of outstanding debt, and you think at that moment that's the best decision for you, then you have no choice. But as a lender, is negatively review when you apply for a loan.
For a period of time, right?
Uh-huh.
What if you have a card since 1980 and you never use it? Should you cancel it?
If you never use it, probably it's closed and you don't know, because that costs the financial institution money to keep that account active. And banks, they don't like to waste money.
How do you get to, and I think this was posted in the chat as far as an answer to this question, how do you get to view your credit report? That's through annualcreditreport.com?
That's one, even though it's .com, it's actually secure. It's from the government. Like this, it provides you this help. You could also, nowadays everybody like can access to, different other sources. I think there is more availability now. But if you see a financial counselor too, I mean, they will show you the credit report to you and calculate your credit score, walk you through the process as well. Yeah. Once you apply for a loan with us, there's a difference, right? Like when you do it with annualcreditreport.com is what we call the soft pull. It's they pull your credit, but it's not like the hard pull credit where it's not, they know that you're not applying for a loan, so you don't get hit, right? Like, like every time you pull your credit report the hard way, the hard pull, you get hit a little bit because you are applying for something, right? For credit. This one is the annualcreditreport.com or doing it with a financial counselor, right? It's like it's like more for research, like you just want knowledge. You're not applying for a loan. That's if you just want to check, that's what is recommended.
Or you can also go through the Equifax TransUnion experience and pull your credit for a fee. And there they give you a more information than the annual credit report, the annualcreditreport.com.
The address of the credit union again?
So the East Harlem branch is actually it's on 117th Street and 2nd Avenue. I blank right now. The address is let me double check. The one
yeah, I don't know.
I know it's like I say it every day and I blank now. But the
Sure.
one
Well, we can come back to that. How does a student loan affect credit? Can I clear them off of my credit report if I cannot afford it? Cannot afford the minimum payment?
Student loans are government loans. So in plain English, the only way that you stop paying the loan is if you die. So it's like you have to work it out with the government to see if there anything that they can do to how you call it? To remove the loan or any subsidy or anything to pay it off. But it will impact your credit score. If you don't pay it, if you make the minimum payment, it's okay. It's gonna help your credit score. But if you stop paying, it's a governmental loan.
Is it possible to have a late payment or multiple late payments removed from my report? How long would it take for the reporting agency to remove it generally?
Most lender, they allow you 1 or 2 payment annually or late fees for free. After that, you're gonna have to dispute it to your credit report. But if the information is true, even though if you make a dispute, they might not change it. The lender might say, no, that information is accurate and leave it there. So you have to just keep in mind to continue making your loan payments on time.
My credit was stolen and it's been messed up for a very long time. Who can help me?
Our financial counselor.
And if there are any additional questions, we will wait a little bit longer. And I think that brings us close to the end of our questions.
This was good. Very good questions.
Yeah, excellent questions tonight. Thank you.
Yes. I'm glad that we get to share, like that this is what the credit union allows us, right? To share the benefits from the consumer side, from our member side, and we kind of add it a little bit from our financial side as well. So it's like a good combination of both perspectives.
Yes. I see somebody has their hand raised. If you do want your question answered, please put it in the chat. But
is there a commission system for bringing in new customers?
No, but thank you. And feeling good about yourself. We are a nonprofit organization.
okay. All right, so
A minimum to open an account?
A savings account is $25. I mean, which is the required account. A minimum to avoid the monthly maintenance fee is $75. So if you open an account and you keep your balance at $75 or more, you don't have to worry about any monthly maintenance fee.
okay. All right, so I think that will be the end of tonight's webinar. Thank you.
Did you say, I'm sorry, financial counseling is no charge?
Yes.
Okay.
No charge.
Yeah, so I want to thank Alicia and Alfonsina for taking their time tonight to drop all this knowledge on us. Good credit gives you financial power. I think we all can attest to that, especially after tonight's webinar, and then with Alicia taking her time to explain it so in-depthly, and it helps you qualify and get approved for loans when you need them. So if you are in need of a financial advisor, please get in contact with the Lower East Side Peoples. Can you say the number again or the email? Okay.
Let me just find it here. And I want to just thank you. And I want to say to everybody, if you want to become a member of the credit union more directly, you can just contact Jakari and he will send us a referral. We have an online referral system. I can send you an email about this, Jakari, too. And what we do is like, you can just drop the information to that person that would like to become a member, and one person of our team will call the member or the potential member, and like kind of talk to you and see what the needs are, and we'll definitely walk you through the process. And the telephone number for our financial counselor, his cell phone is 929-465-1283. I'm gonna also copy it in the chat.
Okay, thank you. So yeah, if you are interested in becoming a member of the Lower East Side People's Credit Union, please call us or email us. You can call our number 212-491-2541 or email Palante at palante@palanteharlem.org. So yeah, I'll put it in the chat as well. And it's already there. So yes, and then so next week we will be continuing the series with the Lower East Side Peoples again, and this next week's webinar will be on home ownership. So I hope to see everyone there next week. And we now have a poll up, so we would like everyone to just let us know how tonight went and how you enjoyed tonight. So I'll give everyone a few seconds to answer that. But thank you, Alicia and Alfonsina. You guys are free to go. We definitely appreciate you for taking the time out to be here tonight. Yes, thank you. And thank you, Robert, and thank you, Daniel.